But yeah, it seems like we've got a fairly small room today, but the good thing is that you record these, hey, and then they live on your website, so we can use this for future reference. So that's
Yes.
good. Right on. But yeah, thanks, John, for having Tammy and I here to talk about small business loans and how to use them effectively. We're just going to run through a few basic things, and then for those that are here, we'll open up for questions near the end. But before we get into that, of course, I'd just like to introduce ourselves. So my name's Cliff Turner. I'm an entrepreneur ecosystem strategist with ATB. And my path to get me here was a little strange. I kind of caught the entrepreneurial bug as a kid, selling eggs and things like that to neighboring farms. But then I went over to Lithuania in 1999 until about 2005. And I was actually working on a medical supply mission there. And my job was to kind of go out into the remote areas, find these, like old folks' homes and orphanages and clinics that had fallen through the cracks of the old Soviet Union when Lithuania got its independence, and just try to figure out what they needed and how we could get donated medical supplies from North America to them. And although that wasn't entrepreneurial technically, because I was being paid by a group to do that, I caught that bug of being out and just trying to see, what can I bring? How can I add value, being creative out in the field and just seeing how you put things together. So when I came back to Canada, I definitely wanted to continue with that type of a lifestyle. So I owned two businesses in the past. So I started that right when I came back in 2005. I opened one business that was more on an EQ in business, how to communicate with customers and understand what they're thinking and what they're feeling, and move that into your business. And then I also had a roofing and siding company, which I sold in 2019. That spent me, or once I sold that, I was kind of thinking, what do I do now? Didn't have a business that I had in mind to start right away. So I jumped into the corporate world and went in with a national small business advocacy group, which made my job into going out and interviewing small business owners. So I learned a ton from people's perspectives and what problems they were facing and what creative solutions they were coming up with. Which I feel like that was my equivalent to an MBA, learning from all of them. And now I have found myself here for the past 3 years with ATB as an entrepreneur strategist. So basically doing things like this, making sure that we have resources that we can share with the public, with all the business owners and entrepreneurs out there, so they can get to the next stage of their business. So it's quite a delight to be with ATB now. And with me today, we also have Tammy Holmes. So I'll turn it over so you can introduce yourself, Tammy.
Thank you. Hi, everybody. Thank you for having me, John. I appreciate it. My name is Tammy Holmes. As Cliff said, I am a business advisor with ATB Financial. I've been with ATB for the past 7 years. My path to ATB is very different than Cliff's. I actually, in my past life, was a nurse prior to coming and joining ATB. It got a little stressful, got a little hectic. I had babies and life kind of evolved. And then my husband opened his own business. We had an Alberta Limited for the past 20 years. And so I kind of just fell into a teller role in Vegreville at the ATB, just kind of looking to expand my horizons a bit. Wound up falling in love with ATB as a whole, as a corporation. They are a wonderful place to work, and sort of just expanded my knowledge from there. I've done many things within ATB. I started as a teller, was a personal lender and mortgage advisor, moved on to asset recovery, loan support, and now I find myself here in the small business area. So I'm super happy to be here.
Right on. And today we're going to be talking to you about some of the resources that you'll find at ATB and some of the concepts you can explore through our Entrepreneur Center. So, of course, if you're looking for a small business loan, this might be one of the places that you'd stop, and we'd encourage you to do so. The QR code on your screen will take you to the Virtual Entrepreneur Center website, where you'll find all kinds of good resources and things to help you on your journey. So things that you might find there are pre-recorded webinars that we've done in the past. There's a whole collection of them there, as well as updates on events that we have coming up. Also, a lot of resources like a business plan template, cash flow forecasting tool, a small business pulse check tool, things that you can use to kind of evaluate your business and help you grow it. We'd also encourage you, if you do visit there, to sign up for our newsletter. That'll keep you up to date on any new resources that are put out, as well as community events that you might want to be involved in. But today the focus is going to be on when to get a business loan and how to use it effectively. So basically, I'll do the first half of the presentation and kind of run you through the idea of, what are some good and not so good reasons to get a loan, and what are the factors to consider if you do have a good reason. And then in the second part, Tammy will cover more the nuts and bolts, how to qualify for a loan and the process of getting one. So for my part, when it comes to the strategic use of loans, this is kind of the rule of thumb that I keep in mind. If you're going to consider a loan, your opportunity that's being created out of whatever you're purchasing needs to outweigh the debt and all the associated costs that come with that loan. So this is the basic formula. So like I say, I'll walk you through a few strategic reasons, a few not so great reasons, and then we'll explore kind of finding this balance out of this rule of thumb formula. So when it comes to reasons to get a loan, there's a plethora of them out there. You talk to Tammy or any of our other business advisors, they can probably write you a huge list of the reasons business owners have come in looking for a loan. And, some are wise, based on strategy, based on data and numbers and proof of what is going to happen. And then there's other requests that maybe aren't as well thought through. So first of all, here's some common good reasons to be looking for bank financing with your business. So the first and the second one are probably the most common. So we've got somebody who's looking to buy equipment or property for a brand new business. It can be tough to secure a loan for this kind of thing. We end up looking at your personal finances more than anything at this stage, but it is a possibility in some cases. So this might be, say, somebody wants to start up a new brewery. So they need to buy quite a bit of equipment, the brewing equipment. I don't know what you call them, those big impressive tanks that they always show off when you go into a brewery. These things cost. So they might need a loan for that kind of thing to get the business going. Later on in life, they might be expanding, and that's that second point. They might need more or new equipment to create more capacity to be able to do more business. And increase their volume so they can create more revenue and therefore grow. So like I say, these are kind of the most common reasons and the most talked about reasons, but might be looking for financing for other reasons too, like expanding into a new market. Maybe you're reaching out to a new customer base and you need to kind of revamp your marketing to speak to that particular group. Or maybe you're going into a different geographic region, so you have to buy new advertising to go into there, or pay influencers, or whatever it happens to be to reach that new market that you're looking for. Another common one is increasing capacity to fulfill a large contract. So this is when your business actually gets an agreement with another business or a customer of whatever sort, but it's a little bit bigger project than you're used to doing, and you need to up your capacity in order to do it. So this might be maybe a framing company who just got a contract with a volume builder for the first time. And so they need to bring in some new staff. They need to purchase some extra tools to keep up with the demands of this new contract that they have. Other reasons could be bulk inventory purchase. You get a good deal when you buy whatever you're selling in bulk, or maybe acquiring assets to improve efficiency. So maybe it's software or something that just makes your business run smoother. And of course, one that happens quite often is just refinancing high interest debt. Business can often accumulate a lot of little loans over the course of its history. And maybe it's time to take a look at those and go, you know what, I'm paying a lot of loans. I'm paying interest on all of them. They're not the greatest interest in some cases. How do we bring this down into one loan through one bank and keep this manageable? So these are all reasons that are, there's some strategy behind them. You can look at this and go, okay, there's a reason for this. This makes sense. We can move forward with this. And that's kind of the key here. But in all of these cases, even if it's a wise reason, all of these have to be backed up with research and data. So whether that's market research or your financial planning, projections, probably all of those combined, you definitely have to approach with all of that done and ready to present and understand it yourself so that you can answer questions about it. Because when you're looking for a loan, of course, you'd need to make a case for why this is financially responsible and creates an opportunity for you. Because that's what we want to do at ATB, is help you create opportunities for yourself and move forward. Now, that being said, there's also a lot of maybe not so wise reasons to look for a small business loan. So this is just a few examples. But one of them, and probably the one that comes up a lot in my dealings anyway, is people who are looking for funding to cover over consistent operating losses. Now, this is not a time to take on a loan in just about every case. This is when people want to use borrowed funds to kind of mask an ongoing inability to generate profit within their business. So this might be, say it's a struggling retail store, and they want to take out a loan to pay the rent that's due each month that they can't make because their sales are low. This is a loan is a band-aid in this kind of case. This is where you need to really look into your financials and your operations and kind of see where is the problem, where is the actual source of why I'm not making enough to pay my rent, and look at that rather than taking on debt and adding to that, because that'll just bury you in a deeper hole. So we're here for that as well. You can always reach out to a business advisor or a strategist like myself, and we can kind of help you think through that process, what actually needs to change, rather than just borrowing more money to try to get through the next few months. Some of the other examples on this page are, just kind of the speculative ventures without a solid plan. It's very easy to see a shiny object when you already own a business, and maybe there's something over here that might help, but not a lot of research into it. It looks great, but there's no proof of it. Maybe not the best time to borrow money to go after something like that. You need to have the data and the proof that this will be an opportunity for you, not just to prove that to the bank, but to yourself. Don't get yourself in the position of chasing shiny things and throwing money at it and borrowing money to do so, when really you need to do more investigation, right? Another one where the emotional side really comes in, and my EQ background really tugs at the heartstrings for this one, is when businesses want to avoid cuts or difficult decisions. And so they borrow money to just try to gloss over those things and not have to deal with them. So an example of this might be a small consulting firm wanting to take out a loan to kind of keep some underperforming staff instead of implementing layoffs. Nobody likes layoffs. It's a nasty business, right? But sometimes it's necessary. So if you're borrowing money to keep on staff that isn't actually bringing something to your business, that's really just putting yourself in a hole. So it's definitely not a good reason to be borrowing money in that kind of case. And then, of course, the ones that make the news all the time is businesses that that are either using their money to buy lavish and unnecessary expenses, or worse yet, funding personal expenses. Now, this is an interesting one, because a lot of times it's great for a business to buy something that's exciting and luxurious or whatever. So maybe it's a small marketing agency. They're starting to see people come into their building, so they want to renovate and they want it to be beautiful and really wow people when they walk in the door. And it's great to do that kind of thing. But those things probably aren't adding to the bottom line in the same amount that loan is going to cost. So that might be something where you'd think, you know what, maybe we do that when we have the cash available. That might not be something to finance. And same thing with the personal expenses. If you want a new boat, that's not for your business to take care of. And if you start messing with that stuff, it really gets you in a hole fast. So these are kind of reasons to where you shouldn't be looking for a loan. You should be looking for other avenues to find the funds for this. And overall, don't seek out a loan if it means you're over leveraging your business and you can't support a clear repayment plan. If those two things aren't in place, then there's probably some preparation to do before you approach a bank for a loan. So these are some strategic reasons to go into it and some not so great reasons to grab a loan. But like I said, let's look at the actual formula here. Let's pretend that we're using one of the strategic reasons. So we've thought it through. We've got the data. This will add opportunity to our business. This is the kind of thing to think through when you're deciding now, should I get a loan for that particular thing? So first of all, we have to think through the potential gains that we're going to get from whatever it is that we're buying with that loan. So just some examples on the screen of what that could be. So the obvious ones, of course, increased efficiency and productivity. So a good example of this might be a bakery. They've been running with, some older ovens and they're doing great, but they want to expand. They want to be able to make more pastries, more buns. And so they invest in an automated baking line that can produce significantly more pastries every hour without having to hire more staff. That's a great thing, right? So this is one of the opportunities, creating more efficiency and productivity. Other things might be enhancing products quality or services quality, just kind of adding to it to make it a little bit better, do a little bit better in the market. Maybe you can use whatever this is that you're purchasing to create a competitive advantage. An example of this might be a landscaping company investing in electric equipment that's really quiet. So now they can service maybe some of these neighborhoods that value that and maybe have an environmentally conscious bent in that community. So they could finance that equipment to get that competitive advantage over their competitors. Maybe it's expansion of their capabilities, being able to offer a whole new service on the side, or just basic increased volume, being able to do more with what they've got. These are all great examples of gains that you can get from the equipment or property or whatever it is that you're financing. So in some way, be able to try to quantify these as best as you can through projections. What is the actual benefit going to be if I take on this loan and get this equipment or property? But the tricky part is the other side of the balance. We know the opportunity, but what are the actual costs? Oops, wrong button. Let's go to the costs. There we go. So the right-hand side of your screen. The obvious one, of course, is principal and interest payments. When we're looking at a loan, we all calculate that, right? We know if we get a $50,000 loan at 8% over 5 years, it's going to cost us a little over $1,000 a month, and it's going to cost about $11,000 over the 5 years. So we get that in stone, and then we think, hey, got it, that's the cost. But no, there's a lot more to it than that. On top of that, there's probably going to be some fees from whatever financial institution you take the loan out from. Very standard. Tanya could walk you through the details of that, of course, but those need to be calculated in. If you're buying property, especially, there's going to be taxes on those things. Land transfer taxes, property taxes, this kind of thing. That is part of the cost of the loan. Even though it's not paid through the loan, it is a cost of that thing that you're financing that needs to be in this equation to balance off with the opportunity. Just like the taxes, insurance. If you're buying equipment, a vehicle, property, there's always insurance implications in this, and that needs to be factored in as well. One that flies under the radar a lot is maintenance. If you're buying a vehicle or any other piece of equipment, there's going to be regularly scheduled maintenance if you want that piece of equipment to last. And that is a cost of the thing that you're financing. So therefore, it needs to be in this calculation, a cost over time. Same thing with fuel and energy. Burning gas in a truck, or take our baker friend, for example. He bought that big automated baking line. It's probably going to run a lot more electricity than his old equipment. And if he's running that much more, it might create more heat in the bakery, which means he might have more air conditioning costs. This all needs to be factored in to the cost of this opportunity. Could also be payroll. If you're bringing in new equipment, you might need new staff to cover it, or you might need more hours from your existing staff in order to use that piece of equipment to its maximum efficiency. And on top of that, if it's new equipment, there might be training costs on how to use it. There's a lot more things that might factor in there depending on what you're doing. But the point here is to really think through, here's the opportunity I'm going to get, but here's all the true costs that come with this thing that I'm buying and financing, not just the payments for the loan itself, but all of this other stuff. Put those two together, and that's where that balance is. That's where you have to see, am I actually going to make enough out of this opportunity to cover all of those expenses and profit and grow? That's the key. Now, that can get pretty tricky, but we do at the Entrepreneur Center have a few tools that can help out with that. So again, the QR code will take you to that website. And a couple of the tools I'd suggest looking at is the business loan calculator. You can easily calculate out a couple different loan scenarios and compare them all on one screen. It's kind of handy to use. And then you can take that and put it into our cash flow forecasting tool, where you can actually month by month over a 2-year span kind of look at, okay, here's what my payments will be. Here's the associated costs of staff and electricity and whatever else it happens to be. And also plug in the extra revenue that you'll be creating with that piece of equipment and compare it and run scenarios and see how that works. Really educate yourself on whether a loan is the right thing for you or not. And then, of course, you can talk to someone like Tammy, who will help you evaluate it further and get you through the process. So at that point, I'll turn it over to Tammy to take us through the rest.
Thank you, Cliff. So yeah, I just wanted to talk a bit about how to qualify for a business loan. You know, the Entrepreneur Center is a great place to start. The QR code will take you there. And I think, you know, further to Cliff's points earlier, we really look at a number of things when a business comes in and asks us to lend them money. We'd like a thorough business plan. So Our Entrepreneur Center does have a template that can help you write that business plan. But there are specific things that as business advisors, we look at when you're sending us a business plan. So a couple of key components to that would be a brief overview of the entire business. So what are you venturing into? What does the business look like? What are you trying to accomplish with the business? What are your target areas? Some background information on the business. Do you have a mission statement, a vision, or core value? And mostly what I look at as a business advisor when I'm presented a business plan is market analysis, products and services, and financial projections. Financial projections are very hard. I understand it's hard to see into the future, but we do like to have at least a year of financial projections in the business plan when you send them to us, so that we're able to really focus in and make sure that you're getting the best product for your needs before we jump ahead with any lending. So that's kind of just a brief overview of what we're looking for in a business plan. How to qualify for a business loan. This is where things get a little more in depth. So first and foremost, we're looking at credit worthiness. When we speak to credit worthiness, especially for startup businesses, new entrepreneurs, we always look at your personal credit score. We do this for all business loans. The reason behind that is, as a new entrepreneur, you would not have any business financials to provide us. You would not have a 2-year history of credit bureau scores for the company. So we lean heavily into personal credit scores. That's where we gather most of our credit information. There are some rules around FICO scores for ATB lending. New borrowers must have a FICO score of 650 or higher. So Equifax, TransUnion, these are all great resources to go and have a look at your personal FICO score. I believe with each of those facilities, you are allowed 1 free credit score report per year, or you can also sign up for monthly credit reports to keep an eye on your credit score. Perhaps if you're a little on the lower end, you might want to see how we can help you rebuild that score. So you could apply to monthly credit scores from those 2 facilities. They do cost some funds. I'm not sure what the costs are. If you're an existing borrower with ATB, and by existing, I mean even personally existing loans with ATB, qualifies you as an existing borrower. So that drops the FICO to 620 is what we would be looking at for personal FICO scores. We do look at, of course, business credit scores for established businesses. Credit history is super important for us. We always look at on-time payments, how you're managing your debt, later missed payments. Those sorts of things play into the credit score. One thing I wanted to touch on really briefly is I don't know if everybody is aware that every time you're late, even by 7 days on something like a TELUS bill, a Kudo bill, Rogers, those sorts of facilities, lines of credit, they will hit your bureau within 14 days of missing that payment. So automatically it is pinged to the bureau and it drops the credit score. So it's super imperative that those types of bills all bills, but those types of bills in particular are paid on time, because those businesses tend to send them to the bureau right away to let us know that the payment has been late. And then the other thing we look at qualifying is the 5 C's of credit. And that is super important when we're looking at, can we lend to a business? So we look at character, conditions, collateral, capital, and capacity when we're looking to lend to businesses. And of course, again, for new startups, these would be the 5 C's of personal credit. So because we wouldn't have a lot of history to go on for business. Character, of course, is your character. How is your ability to pay? Do you make your payments on time? Do you default on any payments? So those are super important when we're looking. Conditions can be external factors that can impact your ability to make a loan repayment. So economy, interest rates, the terms of the loan, all of those sorts of things. So those are conditions we look at when we're writing a loan. Capital is any assets that you have upfront that we could have a look at personal investments, savings, stuff like that. We like to see sort of what capital we're working with when it comes to lending. Capacity is the borrower's ability to repay the loan based on your total debt service ratio. So your debt to income. We look at 42% and lower. We prefer you be on, of course, the lower end of that, but 42% would be the maximum of your debt to income. So what happens is if you're bringing in less than you're asking to pay out, we wouldn't be able to service that loan. So that total debt service ratio always has to be under 42%. And then lastly, collateral. This is a huge one. Most of the loans that we do here at ATB are secured in some form or another. So a collateral is just simply an asset that you pledge for security of the loan, which can be used by us as lenders should the borrower default on the loan. Things that you cannot use as collateral would be life insurance policies. There's often this big misconception that we can use them. We, in fact, cannot use a life insurance policy unless the policy you hold, the cash value of that policy is equal to the amount of the lending product. So example, you have $1 million life insurance policy, but the cash surrender value is $20,000. We would not be able to use that to secure against a loan that's worth $50,000. So those are some things to keep in mind. We do not take RSPs. We do not take RIFs. When we talk about collateral for vehicles, we're talking more along the lines of tangible assets. So your home, your vehicle, your equipment, serial numbered goods. Those are all things that we would use as collateral here at ATB to hold as a charge is what we call it. And that, in essence, is really just an agreement between your financial institution and the borrower that should the borrower default or not have the capacity to pay any of those funds owing, we would simply cash in on the asset that we're holding, the collateral that we're holding for you. So part of my my explanation about collateral is quite often you'll hear financial institutions use the term ALLPAP. And ALLPAP is something that we normally register, all financial institutions register this ALLPAP, and it stands for all present and after acquired property. So what that means is when we register an ALLPAP on the particular loan that you're taking out, we don't just register that ALLPAP on the loan, we register that ALLPAP on you as a person and you as a business. So that means should you default on that loan, get behind on payments, not be able to make the payments, any future personal property acquired, we will be able to take assets from that property and make up the default of the payments of the loan. So really keep in mind when you're taking loans, no matter where you go, be really cognizant of the fact and speak to your lender about, asking them, are you putting an ALLPAP on this? Because what an ALLPAP does is it hinders the ability for other financial institutions to lend to you in the future if there is an ALLPAP on any or all of your property, business and personally. So that's huge. I just wanted to make sure that everybody kind of understood the ALLPAP theory behind when we're lending to clients. And choosing a lender is super important. The three things I always say is make sure that you pick a financial institution and a lender or business advisor that really understands you and works with you, is available for you, is a partner in your business journey, wants to understand your business, wants to help you succeed. These are all super important. You have to be comfortable with the person you're dealing with, because if not, it's never going to really be a true partnership. My other things would be discuss pricing with your lender. We can't always give you interest rates and fees up front. Those often come with applications, but we have a pretty good idea when we're looking. We can tell you about the loan fees, early payout fees, because there's always penalties involved with certain types of loans when you when you make an early payout. And make sure that whatever financial institution you go to gives you the value-added services. And by that, I mean, quite often, if you group together all of your banking in one place, we're more able to, we can take care of you better. We have a really good idea and picture of what's going on in your life financially. You build a really great relationship, both personally and through your business, with whatever lender or team member you're working with. And then we can also look at perhaps reducing certain fees or maybe getting lower interest rates. But when you have everything in one place, it's much easier for me as a lender to aid you in your future endeavors, make sure that I can give you the best quality service, and make sure you're comfortable with me. And if you're not comfortable with me, we have 125 business advisors throughout Alberta who are more than happy to help you at any stage of your venture. So that's kind of my take on how to qualify for a business loan.
Forgot to unmute myself there. Thank you, Tammy.
Thank you.
That's awesome information. Just trying to get us to the next slide where we've got our contact information, and I am having tech fun again. There we go. I'm so great at this stuff. Anyway, so yeah, that is a quick run through of when and how to use business loans. And of course, if you have any questions, Tammy and myself are both available. Our emails are on the screen there. And I'm happy to connect with anybody on LinkedIn as well. Just look for Cliff Turner, and there's a little cartoon. I'm in a blue shirt with some scraggly hair. You'll find me, no problem. But yeah, but I know we have a small room, but is there any questions that anybody'd like to dig into before the end of the call?
I do have one. Does the location factor in for a business loan?
No. So we take care of 90,000 small business clients throughout Alberta. There's 125 business advisors in Alberta, and I have clients as far north as Grand Prairie, Fort McMurray. So yeah, we can. 90% of what we do, John, is virtual. To be honest, it's rare in this day and age that clients really want to come in and sit down in a building. I'm finding majority of my clients all prefer to do things online. We can meet virtually, Google Meet, Zoom, however the client chooses to meet. It does not matter where the client is based. Whatever lender best suits their needs and they're most comfortable with, they can absolutely go with that lender.
And so do you also factor the feasibility of the business plan?
Sorry, say it again. I didn't hear you.
The feasibility of a business plan, do you factor it?
Yes. Yeah, we do. So when I look at a business plan, I don't expect the business to have this big 5-page, written out business plan. But I also, we look at things like, did the client really take the time to research their business, to make sure that this is the right fit for them? Did they factor in markets and competitors, location, all of these things? So really what we're looking for as business advisors is, did you do your research? Did you really research what you want to open before you just jumped in to open a business?
And just to add to that too, that's where the Virtual Entrepreneur Center can come in really handy. Tammy mentioned that there's a business plan template on there. And when we created that, we made sure that it kind of answers all those major questions that a bank will ask. So if somebody uses that, they don't necessarily have to fill it out word for word, but use it as a guide and make sure that those questions are answered. And they'll probably have a pretty good business plan to talk to any lender with. And then on top of that, when it comes to the research, There's a lot of other organizations out there that support entrepreneurs with this. And one that comes to mind is the Business Link. They offer templates and things like that as well. But one of the key things they do is free secondary market research for entrepreneurs. So when you're looking for that data to build into your plan, the business plan or Business Link is a wonderful place to go for that. And then, of course, Community Futures offices all across the province have a lot of data locally and can coach those local businesses on what to include in their plans as well.
Thanks, Cliff. Thanks, Tammy. Yeah, that's all
You're
for my
welcome.
questions. Yeah. Any questions, anyone else? Yeah, I guess everyone's satisfied with the presentation. Okay. Yeah. So thank you very much, Cliff and Tammy, for taking the time to do the presentation. Yes. So I guess that's it. If you have any for everyone else, if you have any questions, and if you want to reach out to Cliff and Tammy, and you can reach out, and you don't have their contact, it's already on screen. You can reach out to me, john@cflb.com, and I'll send you I'll forward you to them.
Thanks for having us, John. This is great.
Thank you very much. It was a pleasure.
Yeah. Thanks, Liv. Thanks, Sammy. Bye, everyone.
Take care. Bye.
Take care. Bye.
Thanks, Sherry.